Hello, traders. Welcome to the Tuesday stream. Turnaround Tuesday for a lot of the market. Really going into the close. That's where it happened. But after hours, it was kind of interesting because, right, I think President Brandon or whatever, and McCarthy, they're in talks now about maybe they're going to reach a deal, but probably not. They said they made a little bit of progress that made the market jump after hours a little bit, but futures reopened and they're kind of flat, a little bit down. So we'll look at that. Here's Bitcoin. Just another day. Just, same price you were at 2 months ago. No big deal, man. But buyers defending 26,550. The low there. But still below that demand line, the upsloping demand line. So you're just sandwiched in between two levels right here. 4 hour, still above the support. So you're not dead yet. I mean, that hidden bearish divergence that we've been discussing the past couple of days has really matured, and you're starting to show negative momentum now. So it's like, where's the fall through? Hasn't really come to pass yet. So underperformance, and buyers keeping the price above 26,555 long enough, it could result in some higher prices. But that's the level, man. That's all we can do is like pay attention to the levels here. Elevated, stagnant, flat markets, illiquid. You got it, right? I wish there was more to update you on. Like, this is every stream. It's like this, man. I can't help it. I can't make your favorite asset do stuff. I can't make it move thousands of dollars a day, hundreds of dollars a day, even $50 a day anymore. It's just, yep, you got it. Ethereum, still above 1730, holding. Anything above 1730 long enough will result in 1972. Hasn't happened yet. You're just hanging out. And man, I mean, I know Bitcoin's got similar stuff on the histogram. You got to wonder how this will resolve, where there is a discernible low on the daily, and then there is a new discernible low on the daily, and the histogram is, it's higher. It's lower levels of negative momentum. So I wonder, are sellers already exhausted up here in the uptrend, right? Lack of performance on the downside, and then, but it plays out, it just performs miserably, right? Up thrust, back test, up thrust, and it only results in a slightly lower low with divergence on the daily. Really starts making you wonder if that were to play out, you'd be running right back up to 1972. The price would. So all makes sense technically looking left. It's only about the levels, right? 1730, 1972, and then 1420 after that. Horizontal lines. That's it really. So you're okay. You haven't rolled over yet. I don't know if they're actually going to let it roll over the whole market. I don't know if they'll let it happen. All right, that's Ethereum. It's hanging in there and losing negative momentum, and just neutral on the RSI on the daily. Okay. DMB down 0.8% today. Not showing any type of divergence. About to fall into the bearish control zone by the looks of it. Not really great. Nothing's really changed. It's like one short from around 330 to 350 and letting it ride to see if we get some resolution downward on the 3 failed attempts to break the resistance. Hasn't happened yet, and you haven't really taken, I mean, is there enough liquidity even for sellers to push the price lower? It's crazy, man. I mean, you're talking about an asset, it was 1 year ago, exact same price. It was 2 years ago, exact same price. I don't know what to tell you, man. Dead market's gonna be dead. All right. So until you break 330, 350, you can't really be bullish. Yeah, I mean, just when you break that, that's the data that would be presented as a very real bullish breakout, and a resumption of maybe a trend that's been put in June, right? Where you made the low, the high, the higher low, slightly higher highs than that high. And yeah, there's just not much till 4:30. So XRP's up 2.3%. It did it, man. For now, I mean, that's great. I love the 200-day moving average being defended. There's been no positive momentum on XRP since April 5th. So you think that would change if this continues? I mean, this is just the start. We have a supply line, I'm sure. Yeah, so you got a ways to go before you even see the supply line, which is at, from here, around 45 cents. So 1.5 pennies to go till you test that. I think it's just down sloping consolidation. Is it a wedge? Don't even think you can call it a wedge so much, but that's a nice little consolidation structure after, you know, already making your bottom. You already made a higher low. You've now made a higher high than the previous high. Now hopefully a higher low, and this could continue, and then the monthly could play out. This is how slow it is, man. These are daily candles. Look at that. That is miserable. Daily candles. Daily candles. Just bad, man. All right. But hey, great news above 40 cents. Always on XRP. Just don't know how long it'll be before it really starts going. Here's total market cap, slanted head shoulders, bearish breakdown, bearish back test yesterday, and sideways now. Where there's just a little bit more downside before you saw a demand line that goes back to January. It'd be the 2023 trend, right? Because all changed on the 1st of January. So yeah, I mean, a $1 trillion total market cap target just to test demand line. And that would be moderate performance. That wouldn't even be good performance on a bearish reversal pattern. Moderate. So just not that big a deal, man. But you can clearly see, are you broken out? Are you above the key inflection points? No. Are you unable to break them and you're just somewhat slightly up below them? Yes, that's true. And hey, when buyers are able to breach the $1.3 trillion level, then we'll talk about an actual breakout occurring. And really, I mean, even 1.2 trillion. That's the big level. Okay, so nice to see XRP is up another 0.5% since we got done looking at it. Wants a little attention, throwing a bullish tantrum here. Hey man, I'll take it. I'll take a 2-3% rally because nothing in crypto really does that anyway. It's just like the bigger cryptos just don't move anymore. So this is like, feel like one of my indoor plants getting misted, you know? Get that water in the stomata of the plant, right? Okay, there are your big four. There's total market cap. I mean, looking at some of these altcoins is dumb because they're just dead for the most part. But I do like Litecoin being up. It's a really nice rally here. Anything above $84 is, I'm very optimistic. Anything with the 200-day moving average and $84, very good. But again, this is what can happen. This is how trend reversals definitely can happen. So you got to be paying attention here. I love the higher low. So now it's like you really don't want to see a lower high here after the confirmation high. But if you did see a lower high, all you got to do is put in another higher low and buyers defend $84 and then it'll just be, oh, okay, just keep making higher lows with a lower high that starts becoming more neutral. And then if it ever tests that 104 level again, you know, it's like ascending triangle behavior where you could almost now, if this pivot's real, you could almost say that pattern's in the midst of developing now, but it hasn't really gone. I mean, this is like, you know, in the past couple of days, the development of the potential new low that would give us the anchor point we needed for a valid trend line, right? You can't have one, you gotta have two to be able to plot a trend line, and here maybe you have it. So how incredible would that be? And who knows how long it'll churn inside this potentially mega structure. And it would remind me of Ethereum back in 2017. So I'm hoping for it, man. I'm optimistic. It's been performing adequately, but we'll see. Not many look like this, unfortunately. Not many are like selling off and making higher lows. Yeah, so a lot have just been hit a lot harder. So we can just go to, switch it over, stock market, S&P 500. You know, it's just the same amount of nothing burger where, you know, just range bound locally between 4,100 and 4,150 for 2 weeks now of trading. But you did make your lowest daily candle close since May 4th, which, wow, who cares? But right, you can tell and understand that the shooting star reversal is still very active. It is not invalid until market participants push the price up and close that price above that close on May 1st. So until you break that, you're still in the fake out zone, right? Where we know 4,058 is a major level, but you got that fake out zone June 2nd, February 6th, even recently April 19th, and then just even more recently May 1st. I mean, not breaking that, I mean, that'd be really bad. And here's the issue. I mean, like, if the TA is respected, S&P 500 is going down next, not up. But again, all it takes is, you know, these losers in our government to say, hey, we're going to pass something and we're not going to default. And that's all it'll take for these algos and bots to just go berserk pre-market after hours and just make the price go insanely higher. That's how dead this market is now. It's just algos and bots. So, but look, I mean, the high, the slightly higher high, then the exact same high, and substantially lower levels of momentum every single time. And you got rejection of the 3-day 200 simple moving average. It's just not like, I told you why it would just gap up and go insane to the upside because of bullcrap politics. But technically, without that, it is implied that down would be the next move, not up. But we'll see. Yeah, it's individual assets are the best things to be traded. Not these index funds. They're garbage. Garbage for trading. Okay, so Dow Jones, that's bad. It's like a kind of a better argument for downside than the S&P 500. S&P 500, MACD histogram on the 3 days saying down next, not up. But the Dow Jones is saying classic distribution, and now formally and undeniably below the inflection point, right, where there is substantial downside. That happened today. What else happened? Well, you know, the last 3-day candle, a breach of the 3-day 200 simple moving average. Now just let there be no doubt, you're well below it. And look left to understand it's just a couple levels. I mean, the major one was really like 33.7, 33.222 was the Leroy Jenkins level, and it was holding for, you know, 6 days or so. But look at this. I mean, how does one ignore the classic distribution? And on the third peak, the rule of three, right after that third peak, that third valley, there's normally resolution. Look at, this is I call it the wombo combo. Anytime you have classic distribution or classic accumulation on the third peak or valley, there's hidden divergence. You got it. It is implied a continuation downward. There was a bearish engulfing candle that was identified May 1st.
GML on daily chart.
What's up, Giggle? Thanks for the 15, man. Yeah, sure.
What do you think about the Jamie Dimon Epstein stuff?
I don't think about it. I haven't really looked into it. I have no idea what's going to come from that. What did Elon get subpoenaed to from an island country? Dude, I don't know. That is another world that it just doesn't really have a place on the charts, really. Look, we'll talk about like fiscal irresponsibility of the government. You know, like, hey, money printer go burr, sending money to, you know, for gender studies and the Middle East randomly. We'll talk about that because that does affect, like, you know, inflation, deflation, stagflation, all those things, right? But to get into Epstein, I don't think it has any bearings on this. So I don't even know, man. Right? Okay, so this is like incredibly good if you care about charts being your compass for where an asset may or may not be going next, right? Because it's been implied that down majorly would be the next move, and hopefully it's just the beginning. And I say that hopefully because wherever the TA is telling us there's a probability of where it's going, I'm hoping it goes that way because there's a higher probability of it going that way. So better than just being blind, having a blindfold on and waking up and checking numbers and not knowing anything about what the psychology of buyers and sellers are. This is incredible. I hope this thing dumps hard and performs well and we see 30K on the Dow Jones. I would say the white swan is they just figure it out. Whatever day these idiots in the government figure it out, I just say, okay, yeah, stupid bots, illiquid market, pump on the stupid news. I wonder if that would be enough to really get things going again. But this is the amount of time, right? December of 2022, and now it's mid-May. The amount of time that market participants have been offloading their position quietly and subtly. That's the concerning part. That's why you really, if you can identify classic distribution going on significant time scales, it's stuff you do not want to ignore, you want to pay attention to and allocate. One would allocate their portfolio accordingly to that. Okay, nice move in the Dow Jones today. Nasdaq can't stop, won't stop with big tech. The drivers of the market. Here it is. It's not a piercing line, it's on the daily. But, all those gains kind of given back at the close today. It was pretty, whoa, what's going on? But you're still above the fake out level, right? That you broke out. Unfortunately, you did not have a higher close than you did yesterday, which happened to be the highest close of the year of 2023. It was the highest close, it seems like, since late August. But I would just really, I know it keeps doing this. And you just say, oh my God, I'm about to capitulate and just buy. But dude, I'm telling you, look at this. I think they could very well keep going. But mother of God, dude, look at your rising wedge on the Qs. You see it, right? I mean, that's, wow.
Technology, what is that all about? Is it good or is it whack?
There is an unfilled gap. You may have filled it today. Oh, you were so close. All right, look at this gap. The unfilled gap. Look at the date of August 18th, 2022. You can see it. It's right there. Because, like, well, what happened the next day? Well, after hours pre-market, dump, and then you opened way lower. That's a gap. All right, 329.23. The QQQ today got as high as 328.90. So you almost filled the gap, but not quite. After hours, you're up 0.12%. I wouldn't worry about it. But you get where the concern of, like, man, this is the type of stuff that would get the dumbest of dumb money to just say, you know what, I can't handle this anymore. This thing keeps grinding higher. I gotta buy now. And it's like you are one's buying on the tail end of a massive rising wedge pattern, which is, in a downtrend where guess what? You're at the 886 levels, 90% retraces. That is the best value perceived area for shorts ever. Hasn't happened yet, right? It could just break upward. Okay. But this is the area where it's the dumbest area ever to go long. It just is. I don't care if it keeps going higher. This is not a strategic entry. You want to talk about strategic entries? Go back to ice lines from history. 1 time, 2 times. All right, we'll talk about buying low. But up here, you're not buying low. You'd be buying stupidly high. You might straight up be the exit liquidity the market participants, smart money needs to dump, to sell everything, to begin a brand new wave down. And this hasn't happened yet. And maybe it never does. Whatever. It could break up. All right, there's your Qs, you know, Nasdaq 100 tech, and then we can go to the IWM, which Battle of Hastings ongoing. That's bad. I mean, it's up 0.33% after hours, but dumped hard. This is what I'm saying. Like every day, look at the whipsawing. This is for a normal human being. This is untradeable. Like in day trading, untradeable stuff. Like this is crazy. But here's the stuff. So there's like a supply line that goes back to February and March, and just another failed test of it. I mean, you opened at 174.80. No, yeah, you closed at 174.86 yesterday, and you just gap down. You just open at 173.66, sell off all day, and you ended up closing at session lows, and it was the lowest daily candle close since May 4th. And guess what? It's just another day, another close below the 2018 peak. There it is. You close below it. So despite maybe one low and then the second low, and it's like a double bottom dragon, so much weakness, not enough strength at all to really have much conviction here. You can't. It's just grinding sideways, man. It is at the same price it was at in May of 2022. Awful. You hear me? 1 year later, identical price. All right, there are your index funds. Cool. XAU, that is, again, you just can't be short-term bullish based on the structure. And there you go. Bearish engulfing candle was confirmed yesterday. It's not really gone down. I mean, the bearish divergence is certainly there. I mean, it has the variables of a reaction and it'd be downward, a more significant move down, not just this, where it's just upsloping and consolidation and holding. Look, you can even see it. It's like, what? You might have broken it. I mean, that's like that Flagstaff right here. Yeah, you kind of broke that yesterday. Look, so the bearish engulfing candle and the demand line was breached. The demand line that started, it seems like, developing March 21st. So over a month of consolidation, and you just broke it. So just letting you know that means buyers are exhausted on a pretty significant time scale at a deep retrace level. So this is like, I know, I get it, man. Who wants to bet against gold because of everything, central banks? But this is like short territory. This is not long territory. And what we're hoping for is, you'd think, like the short territory, it plays out, but it performs miserably, where miserable performance would just end up being a higher low than the low from the beginning of March around 1800. So it hasn't really played out too much yet, the bearish divergence. So that's where I'm at on it short term. Yeah, long term maybe at $3,000, $5,000. But again, you are staring into the face of like what we love. We love seeing the variables line up like this, because it means it's more probable that gold will go down in the short term than it would go up next, right? Silver continuing to draw down. Another bearish engulfing candle today confirmed, lowest daily candle close since March 29th. And you got a little bit more downside. Probably go test $23. That old demand line or supply line you broke. Maybe test it as a demand line for the first time ever. Yeah, not performing too great. Well, I mean, it's just good to see confirmation highs at resistances resolve with downside. That's good. One time no one knows, second time everyone knows, and lower prices. Good. That's why it's like with gold, like when asks, it's time. It's time for the sellers to come in and push the price way lower, and they haven't done it yet. Just like been hounding about energy, XLE, for so long, man. So long. Like, it's at the ones, like some of the individual energy stocks, like they're at 1.618. They're double, triple topping at the global 1.618s with bearish divergence on all the oscillators on the weekly. And it's like literally everything you could dream of for downside and no movement. And it's finally starting to happen. As of today, I tweeted about it. 5 people saw it. All right, to do, man. Like, I'm just done. Like, as an influencer, I'll be long forgotten, dude. Shorts don't work. Nothing works, man. It's just like, I'm done. Maybe it's copyright music. Maybe it's just my analysis sucks. I can't make myself like, yeah, I'm doing all I can. I'm doing like the best I can. And I can't get like growth to happen. It doesn't matter. Try something new. Not even my own subs watch the shorts, dude. It's terrible. But look, man, XLE broke 78.37, lowest daily candle close since March 17th. And the ice line that you cannot deny, going back to 2017, 18. Shoot, dude, 2011. Look at this, 2007. You're below it, and you can see exactly what the price does below that level. Look at it every single time, straight up and down, up and down, up and down. So why is that not the why is the target not straight down? Classic distribution over the course of what? How long? 150 plus days of classic distribution. And it's time to resolve. The confirmation line of that 3 falling peaks is 75.80. You break that, bye-bye, XLE. That's the thing. The demand line of the rising wedge has already been breached. It was breached today. So that's a major development. You're not oversold on the daily at 32.6, but you're certainly in the bearish control zone. That just implies there's way more room for downside on the XLE, and it makes sense. So much sense for a downside. The cycle's over on energy. Look at this weekly, man. Get out of here. Bearish divergence on the RSI, and there it was. You up thrusted, you back tested the up thrust brilliantly. It's just chart art, man. If you know how to read what these people have taught us, it's beautiful. You can't get any better than that. You can, I guess, with one last lower high, and you can tell how weak it is because the buyers, when the pivot came in and the buyers pushed the price higher, they were so weak. There was such little demand and or so much supply that those buyers that attempted to rally the price higher, they were unable to even test that 2008, 2007 peak, the candle close, June 2008, as resistance. They failed. So that's a big subtle tell that really weak, and the sellers are getting aggressive, and the last peak, we're at 1, 2, 3, rule of 3. We're looking at the Dow Jones right now, showing very similar stuff on less significant timescales, the daily, not the weekly. So that tells you how effing real this is here, okay? All right, just buckle up, XLE. That would certainly, right? Think about it. While everything was dumping, getting wrecked last year, not energy, not the XLE. It was the best performing sector on the stock market last year. Well, guess what? It's done. It's over with now. Based on all this. So that means,
your work
wow.
will live on beyond anything these influencers will ever do. Van Gogh died with no appreciation for his work. Just keep on keeping on. If you really want influence, you'll get it. Appreciate you.
Nah, I would never compare myself to someone like Van Gogh. That dude was a literal genius. You know, I know he cut his ear off for a girl or something, but dude, I'm not even in the same world as him.
Greetings, Mitch. If you truly respect Fibonacci, please watch this on YT, the movie Great Pyramid K 2019 by director Femi Krasnicki. This is eye-opening. Pipe to the Mitch Kang. HBAR, BTC Weekly, please.
So Solta, thanks, dude. Thanks for the recommendation for Fibonacci. All right. See what I can do. Thank you. And we'll look at H-bar to the Bitcoin. Thank you. Appreciate it, man. All right, so another like notable occurrence today were the banks, right? XLF. Let's take a look at that real quick to start it. Very, very bad boys. Okay, look at the weekly. You know, just starting it with this time scale, you can see the 200-week moving average. It's no joke. It's there. And I didn't even know this till right now. But like, look how the 200-week simple moving average It was breached last week, undeniably, with a candle close, right? Traders settled up lower than it. And then this week, what's happened? A rally just to formally back test that 200-week simple moving average as resistance, and then follow through is occurring. We got 2 days, 21 hours, okay? A few more trading sessions before the weekly close. But for now, dang, if this continues, if this stays as is or worse, my God. You know you're going to $30 next. It's easy. Look at the, wow, man. Holy crap. What was it? This channel I have, right? A demand line that goes back to the global financial crisis. Nader, 2011 gave you the second anchor point for this demand line. Then you get a third touch, August 2015, February 2016, another one. And then, you know, the COVID crash freaked everything out. But then, you know, buyers pushed the price up. And then you got a formal bullish back test of that demand line again, representing that it is back to being formal support like it was. This was, you know, a black swan event, okay? And then the rally, you know, and then you whipsaw it all the way through, you know, the top trend line before the, you know, false bearish breakout. Fell back below it, back tested it. And now that whole channel, you can see like, the heart lines being regarded as resistance after this scrub loser rally. Man, can you see it? Can you see the hanging man type candle there? Let me just get rid of that so you can see it pretty clear. That is a reversal all day. That's definitely hanging man behavior. So I wouldn't be surprised. If this really performs well in the next few days, well, downside, then you'd be getting 3 black crows after that hanging man. Wow. All right. So that's the XLF on the weekly. Dang. The daily. It's ugly, man. Yeah, confirmation distribution. Oh, God. Evening star. There's no like support here. You know where the support is because it's been tested in June of last year, tested in October last year, tested in March of this year. That's it. That's after like the bear market rally occurred and then you confirmed it was over already. Far less market participants involved in the XLF than before. And it's time to go test the bottom again and see if it's a confirmation low. But the trend is very bad, very, very bad trend. And if you want an 886 retrace, this seems like, yeah, you'd be going to like $25, then eventually $22.89 down there. 886 is probably around $20 to be real. So it'd be 33% more downside on financials. So pretty ugly. Yeah. So here's your Pac W leading the charge again today. It gapped up. You know, this thing, good luck, man. This is like a tornado. You know, what happened today? That's bad, dude. Like, I don't know how this is going to go because the context is kind of insane here. It's not like, oh, you're at a peak. You topped out after a run. Japanese candlestick reversal. You kind of like are all over the place because of the gaps and the moves and all that. And I'm just showing you that there's like a potential dark cloud cover presenting itself way down in the basement. Normally you're looking for dark cloud covers at tops, not bottoms, but this is wild. And it's beautiful too, though. Just it's right there. One huge green candle. And then, right, market participants this morning opened the price higher than that close. And he went a little higher. And then just dumped all day and then pierced through 90% of the candle with a close. So any fall through tomorrow would give you I guess it would give you a confirmed dark cloud cover at the basement. More like dark swamp cover, right? Cloud, right? That's what it's called, the dark cloud, because it's at tops. So it's like the dark swamp cover down here in the frickin', you know, the bayou swamp, dude. I don't know, the swamp, the marshlands. Okay, Pac W below $5. Yeah, it's up 6% after hours. Welcome to, it's going to be like this until it goes to zero or finally the crisis is over and then everything reverses. It's going to be 6% to 15% every day, just about. Okay. And then you had MCB that got wrecked today. Another like potential like dark cloud cover situation, dark swamp cover. Just already brutalized. I mean, it's tough. It's almost like they've gotten so destroyed. Now you're just flirting with disaster with taking shots on these. Like, right, there's, we know they'll probably go bankrupt or they'll be insolvent at some point. There'll be a bank run. It'll be scary and crazy. But dude, it's just now casino territory on these. Like, man, there's plenty of opportunity to take reasonable, articulated argument support. There's articulated argument for a short on many assets out there. And, even some on actual banks, the banking sector assets, but like stuff like MCB, you don't, again, it's like a tornado, man. Trying to track a tornado, that thing could just change direction real fast and wind up hitting you, so that's, you'd be like shorting at supports, you're just, trying to take a gamble on the complete and utter collapse of Metropolitan Bank Holding. It's tough down here, man. The winners were the shorts. They made their money, and now it's like it could confirm a bottom here, and that could have been the bottom the second time, May 4th, and it could just go insane from here. At the same time, it could be going insolvent, going to zero soon. Flip your coin. USB, another one that's just devastated, and I don't know how this is going to resolve. This is really bad. This was, holy crap, man. This was the lowest daily candle close on US Bancorp of the entire crisis. And wow, if this didn't happen today, holy crap, man. All right, USB, you got to go way back, man. US Bancorp. It was the lowest daily candle close since March 7th, 2012 today. 11-year lows where traders settled up. That's disgusting. On the daily, man. Down 3.27%, up 0.35% after hours. Who cares about that? After hours trading is a joke. So, and all that being said, you are just sitting at a support. Like, it may, and that's the problem, right? I mean, like, we know probably insolvent, probably going to collapse, probably screwed, right? Unrealized losses are insane. If a bank run happens, it's over. Intervention, bad stuff. But it's at the support. It has not broken it for real. We know the downside potential below 28.50 is, it's extreme. Easy target of $20. So you're talking like, what, 25% downside or so? Yeah, 27% downside below 28.54. You just don't know if it's going to break now and capitulate fast, or if it's now after this long extended drawdown, it's going to it's going to spring and flirt around with the level and then rally for a dead cat bounce before finally later collapsing to $20. You just don't know. But so far, this is so bad, man. Very ugly. Okay. PNFP looks almost identical. I mean, it's very similar to the KRE. Wow, look at the back test. Resistance, rolling over, awful. TFC, I'm just looking at some of the worst ones on my watch list. TFC is super ugly. Wow, just, I don't think there's support. Support's down to like 25.60 again. KeyCorp. It's up almost 2% after hours. I mean, all the losses today are right back. This is what I'm saying about trying to play these destroyed regionals. You're just asking to maybe get squeezed and just your position wrecked. So there's just like limited downside if, in fact, maybe the regional banks do not utterly collapse. We know if they do collapse, there's stupid amounts of downside still, right? They can still lose 100% of their value, but dang, man, that's a tall order to be like, you're like Michael Burry, man. You're calling the regional banking collapse. I mean, there's going to be more that have collapsed than already. Whew. and soon with your position, right? So yeah. Oh, whoops. Sorry, wrong button. So we got less than 10 minutes till your daily candle close. Thanks for being here. If you are, like, whatever. Thank you, I appreciate it. Can't believe you're here, really. Oh God, look at AX. You can talk about like, this is one that's a little more reasonable because it's a major bank. It's not a regional. Like the majors are, they look kind of prime if you taking shorts or something. There are some out there.
Big drop in the future.
What's up, Varize? Yeah, we'll look at Bud. Thank you, man. Something like AX looks like death is upon us. Yeah, that's what it looks like. A right-angled, ascending, broadening formation, bearish continuation pattern, completely developed. It's massive in its size. Over a year, large pattern has developed here. And you are rejecting the 200-day simple moving average as resistance, and it's undeniable. And it's like one high and a second high locally. And the negative momentum's just begun to build. The oscillator completely reset from that March low when it went to 20. Well, guess what? You're sitting at 43. The downside's like almost unlimited. Like this is one where, oh, completely understand. If someone's trying to play something like this, I'll feel a lot better. It makes a lot more strategic sense to be, one would be taking a position like a short or a put on something like this than like KRE or, you know, PACW, MCB, right? Or what was the other one? WAL. They're seeing it. This is like structurally setting up for way lower prices eventually. I don't know when, but if market participants are able to push the price back to 34.30, it will be a confirmed partial rise. And when you get a confirmed partial rise, and I think the context is pretty good for this, there's a 70% chance of a bearish breakdown. I would not be surprised at all if that happens. Stop loss probably just somewhere marginally above $41. Gotta be, right? That's the argument here. Your argument for it would be that. So it's beautiful. It really is something gorgeous. All right, almost identical context to the hex chart last summer before it dropped 60% in like a day. And then of course the members of that cult tried to say there was a reason for it, you know, and it never recovered. We know that. I mean, it recovered for a lower high, and then it has now collapsed again. Deutsche Bank down 2% today, but it's up 0.87% after hours. This one's not as bad as some of the others. It's awful. I mean, it you know, it made a higher low here, but then a lower high. So, I think there are better ones out there. Man, I tell you that low right there from 2016, haven't even tested that yet since breaking it. So, nah. PNC is awful, dude. Just, this is a major bank, and you're below 116, 115. Look at this weakness. A bearish engulfing candle today. You know, it's crazy. It didn't even take out it didn't even make a lower daily close than May 12th, but it was very close. You can see it rivaling it like that, but you're just in no man's land. All the support resistance has been reached, and there's just not much there till $100. It would require a short squeeze of legends to get you back above that soon, before $100. And all day we go, like Regions Financials, man. This like that right angled ascending broadening formation, massive pattern. Here it is. It already broke though. Already broke. And you're thinking, and you're waiting for $13. You know what? That's the target from here. $15.88 or $13. Because I go all day on this stuff. I don't know. You know, and like whatever. Like, it's not like this everywhere. Let's go to Apple real quick. I do want you to see something. This is really, really insane here, and it closed this way too. Okay, so the new data presenting itself after earnings has only strengthened the bearish argument. Not like, oh, I'm now long time bearish on Apple and it's going to zero. I just mean like where this asset is at the perfect level for downside. You've now, what I say, strengthened the bearish reversal argument. Now you have triple bearish divergence, and it's undeniable. And today was the first level of negative momentum painted after that triple divergence appeared. You have it on both oscillators. And here's the thing about it: the rising wedge, as you can see, the gap up on earnings sideways, and then you fell back into the wedge, and then today there was this formal bearish back test of that supply line. It is now a supply line again with confirmation. Yeah, it's up 0.09% after hours. Great, dude. But that's what's happened. That's the newest data that exists on the Apple chart. Market participants have reconfirmed the validity of the rising wedge based on that. So with this new data, with the matured and complete bearish divergence, you think like the next thing to happen on Apple is a major flush downward, at least a gap fill. Mother of God, a gap fill at 165, another freaking gap fill at 163. There's so many unfilled gaps on Apple. Here's a gap at 157.71. My God, a gap at 143. There's unlimited gaps to fill. And if this is all respected, next move's down, not up. But we'll see. Come on, scam us, algos, with the, just illiquid market. It's crazy. It really is. I mean, if it didn't say Apple, this is like saving the world right now. This chart. If it wasn't for these majors, these mega cap tech stocks, dude, we'd be in shambles. Holy crap. So good for them. Pumping. And it's catching some, Apple's catching some support here with the other ones catching up. One being Amazon, what a beautiful piercing line at a key support, and a rally. You made your highest daily candle close since October 26, 2022 today. Just rallying on up, rivaling that high from February 2nd. Unfilled gap. And no edge. I mean, no bearish edge really like Apple. It's nice here. Google doing the same thing, or it was intraday. Yeah, look at this. My God, highest daily candle close on Google since August 18th. Second target is upon us at 125. First target of the trade setup was 117. And just running, right? Just running. Doing what an asset does after accumulation appears and there's enough demand to really make it play out. So after the accumulation, sometimes the accumulation appears over all this time, there's not enough demand, and it rolls over and we continue to descend in the prevailing trend, right? Downtrend. So just to go and look, you're in the common retrace zone. So all is normal here on Google. That was the whole trade setup idea anyway. It wasn't like we're saying, oh yeah, down here, identifying the class accumulation with a hidden bullish divergence, which is the inverse of the Dow Jones, literal inverse. It was the fact that we know common retraces between a 38% retrace and a 618, and that's all it's doing right now. Common stuff. We got 2 minutes till the daily close. So let's just play it. Then we go to Microsoft. Check it out. Another day. It's just up there, but really couldn't continue. I mean, it made an intraday yearly high, right? Intraday year-to-date high, the highest price since 52-week highs today. Just didn't close higher than you did May 10th. So, but you're really elevated up here. This is the ceiling. You are approaching a ceiling with just almost no down, right? There is still, and I get it, man. It's hard to argue because it just keeps going up, but there is very real bearish divergence on Microsoft nearing a major resistance, 315, 318. But yeah, I could just continue straight line up. All right, going for the deep retraces. All right, we looked at the big four, and then we look at Nvidia that was continuing its craziness, pulled back some at the close today, but is up after hours, of course. But highest price since January of 2022, highest daily candle close since, the same, like January of 2022. But testing that, you got a structure here, right? And you're testing that supply line again and respecting it for now. Respecting it. Still above that high from April, March of last year. So, but look, the problem is, just like Apple, with this a little bit more upside that's happened, it has just strengthened the bearish argument, the bearish reversal argument. Not, oh, Nvidia's bearish, it's going to zero. Just mean like, what's stronger than just bearish divergence? Triple bearish divergence. So that's what's occurred today. So, and you're just straight line up, man. You're starting to like really testing your luck here. AMD broke out. I really like to see that. That was at a major inflection point. Just boom, right? Did it highest daily candle close on AMD since, by the looks of it, August 5th of last year, highest daily close of 2023. And I really like to see it above 97.90 because that was like a high from December 2020. And I loved the back test in the past couple days. The September 2020 peak became support not once, but then twice. On Friday and then Monday yesterday, and then fall through today. I like that. Cool. So there are just these local highs here. I mean, the major one, it looks like 119. Let's see if it can do it. I mean, again, if the index funds roll over, Apple rolls over, there's no way AMD is going higher by itself. Like, this will be the top if the TA is respected on Apple, S&P 500, Dow Jones, and at the Qs, that there's finally bearish resolution of that rising wedge. It's got limited upside. Okay, so let's go to Bitcoin because the daily candle close, whatever. Just stuck in between, man. What does one do when there's like a consolidation structure? It could be interpreted as like a demand line that is now a supply line, but then you've got the horizontal line, local horizontal line that had been regarded as support, even with a spring back test, and it's just in between them, man. It's tough. Really tough here. You can imagine, like, if someone wanted to take a shot on Bitcoin for upside, if they truly wanted to, you know what to do, right? It's pretty simple. If you know the level is 26,555, 26,682, one just would set a stop loss up marginally below that level and let it ride. It's kind of rough doing that when we know what the index funds are doing. Yeah, I'm really thinking, like, if the index funds are rolling over, that means the VIX is spiking, therefore it's not going to be good for Bitcoin. And Bitcoin, like, legit is showing hidden bearish divergence in the 4 hour. This really has performed like trash so far. And it's still above the levels. So that's the thing. Like, you can strategize. You're near a level where you can strategize an entry for a long if you want. But, you know, normally when you're at one of those areas where you can strategize a long, you normally want the best variables possible at that level. It's not just about the inflection zone. It's about the inflection zone and the edge that could be potentially represented there. And you're pretty close to it. So, but again, there's distribution going on. There's been distribution going on. You made a lower low. You're kind of in a short-term downtrend. Like, the trend reversed in the short term. You got all the makings of that. All right, we're only higher highs, higher lows, higher highs, higher lows, and then you peaked out at a key inflection point. Then you back tested it as resistance, sold off, and then made 2 lower highs than the previous highs. And then rolled over to make the lower low, which pretty much solidified the short-term downtrend, confirmed. That's okay. Like, that's what I'm saying. A short-term downtrend is not really that big a deal. This is a long prevailing uptrend or something, which you have been in one since 2023 began. It can end at any time. So that's what I'm saying. If one wants to strategize, they do it with that, with an entry around where it is, with a stop just somewhere pretty tight below 26,555. That's it. But you're staring into the face of hidden bearish divergence. So it's just kind of like, you know, if there's like a green light, red light, yellow light. I would say this is probably more like a yellow light for long on Bitcoin, right? Green lights were inflection point and a discernible edge and value perceived areas, retraces, right? All that. pretty yellow here. Okay. That was it. I just was looking at, you know, Bitcoin, Ethereum, top of the hour. Logo on the 8th, something that it's a joke because my uncle worked at the Weather Channel for a long time. I grew up going there and stuff, the station. It's like, okay, Weather Channel. And it's like, ah, well, whatever, dude. Who cares? I think it lost its power years ago or something. I mean, here's Ethereum, the same type of situation here where you're kind of further off. You know, you're 1822, so you'd have to take on some pretty significant losses to have a strategic stop loss set up that it triggers. Yeah, you'd be like down in on a position like 6% almost. And then your stop gets triggered. That's kind of rougher than Bitcoin. But you're on the other side of the fence. You say, all right, that's the cutoff for me. So one's like, all right, we're holding 1730. So the next target's 1972. Maybe this divergence is being identified properly with a low and then slightly lower low. That's where we are on that, right? I mean, there are levels 1420, 1730, 1972. And you're in between them. All right, so we'll knock out these couple requests and I'll just let you go, man. So it was SGML, I think. Wow. How about that, dude? Oh, Sigma, yep. Sigma Lithium, which should have always, like the marketing team should always implore the Sigma Lithium execs to change their name to Ligma. Right? Sigma and Lithium combined is obviously Ligma. But yesterday made the highest high since ever. All-time highs yesterday, today, and a formal bullish breakout. Today, nothing. Just didn't even back test the breakout, actually, unfortunately. Right? You would love to have seen that. Market participants confirming what was once resistance and all-time high from October 31st of last year became support. They didn't do that. So units up here, kind of broken. You're broken out with a candle close confirmed, but no back test really. But this is great. I mean, my God, lithium making the comeback. It's like the reaccumulation going on, and you just don't know how high this could go. It could be a fake out, right? So just don't. If you start falling back below these levels, understand that was an up thrust, and that means there could be downside to 2850. But yeah, pay attention. Definitely some Jesus chimes for an all-time high on Ligma Corporation yesterday. It say we had a target for price discovery. 44.29 is the 1272. 1414, 4650, 1618 is about $50, a little less. Not really anything implying that buyers are really exhausted here. There was a bearish edge on this second test here, April 14th, and then a major sell-off occurred, but buyers are in control of the market, so it performed pretty miserably where it kind of maybe rivaled the previous low, but still ended up, the buyers pivoted the asset before making a lower low, in fact, made a higher low, so even more subtle accumulation, right? The sellers were so weak and/or there was so much demand that the market participants could not even push the price to rival the low. They could only make a subtle higher low. That's a tell. Yeah, broke that demand line, but right back above it in a matter of a few days. So pretty strong stuff here, man. Nice. Ligma Corporation. H-bar to BTC. H-bar to BTC, about what you would expect it to look like. My God, dude. I haven't looked at this in a long time. I'm going to update it a little bit. It's clearly in a range. Right? Clearly in some sort of range here. I would say do nothing and wait for H bar to BTC. Wait for it to lose another 39% of its value before it sees a formal support. That's all you need to know about this chart. Meaning, if there's 39% downside from where it is literally right now, that means H bar in the coming weeks, months, is not going to outperform Bitcoin. In fact, it's going to get devastated to Bitcoin. That's what this chart's implying. It doesn't look like 39% downside. I just measured it, and it is. So this makes me say, I'm not going to own H-bar. You might as well just own Bitcoin instead of owning H-bar based on this chart alone. Okay, that's it. I wish that's the analysis, man. I wish there was more to talk about Solta. It's pretty simple, unfortunately. All right, let's go to Bud. Anheuser-Busch, request by Varize. I think he just tips me because I know how to say his last name right. I used to work with a guy from Louisiana named Varize. I think it's like French-Canadian, right? Not Canadian, French Cajun, sorry. Oh man, how brilliant is this? I'm sorry, this is just, oh God, I love the gap fills, man, how powerful they can be sometimes. That's exactly what happened. Anheuser-Busch, there was an unfilled gap all the way back from January of 2022. That's where they pushed it and tested it, and that was the top. 22% of the time, a gap fill will act as a resistance. Well, this time it was. Sell off and an attempted rally here. Unable, right? The subtle tells, man. Market participants were unable to reach that level again to test it before the drawdown, a new drawdown began. And even this little probably short squeeze or something, I think this was maybe Friday, right? Maybe not Friday, maybe 2 weeks ago. But just the third attempt here. And then anything below 64.75, that's the cutoff, right? That's the liquidity desert, right? You know, straight, looks like a wormhole. You can see it's like Interstellar, Matthew McConaughey, like going through the freaking wormhole, man, going to another galaxy, up and down every single time. So it's going straight back down, Matthew McConaughey, right? $59 target. If you don't hold that, another freaking Interstellar wormhole until to 53.73. I mean, straight up, straight down. So I think that'll be hit, of course. Like what they've done to their brand, they've actually, you can't even believe, like, they've actually destroyed their brand. It's like a cultural thing too. And I mean, when you ostracize your key demographic like that, what could you expect? I mean, this was almost like a perfect chart. It went a little bit higher, right? But dang, man, if that's not beautiful, isn't it? There was bearish divergence up there. There certainly was. It was already identified. But this is like the gold chart. It's a little bit different, but look like from like the harmonic and the bearish divergence, right? That's like what you'd think would be coming on gold next, but it hasn't happened. It may not, but yeah, maybe there's a type 2 return, but hopefully not. Let's send this thing to 53, 73, and then eventually, if we're lucky, $37 again. Remember, long-term established downtrend, no one can deny it. It is reality. You're delusional to think it's not. This long-term bearish trend began long before even wokeness was a real thing, before it had really taken foot into our society and destroyed it, right? Metastasized. This downtrend had been going on. So lower highs, lower lows, lower highs, lower lows for years, right? And so now what's happened? The bear market rally from the COVID crash low and the money printer go burr has ended. It has concluded with a substantially lower high than all the previous highs before it. And now what's happening? Well, you made a lower low locally than your previous low. Uh-oh. That's how the beginning of the bear, like, right? You were in a shorter term uptrend, midterm uptrend. How do you reverse the trends? Well, when things start reversing, right? You're not making higher highs, higher lows anymore. You're not making a lower low than previous low, and now officially lower highs than the previous highs. And then, drawing down to make a couple lower lows than previous low. All right, it is confirmed the trend has reversed back to its long-term self, which we know, right? And so the bearish harmonic and the bearish divergence and another subtle lower high just for the gap fill, and then just puking, in the past couple weeks. And yeah, you got a catalyst involved with that, which is, yeah, they've destroyed their own brand. Yep, not smart. But my ESG score, and then Miller Lite did it too, and they're owned by who again? They're owned by, is it Fizz? I can't remember. Is it National Beverage Corp that owns? Molson, yeah, Coors. Tap, that was it. All right, let's look at Tap since we're here. And a little different story, but I think their like hold my beer marketing strategy. I'm looking at Bud Light, only came to visibility like yesterday. Long-term death trend since what, the same time, 2016. But different chart, higher highs, higher lows. You just made a higher high than the previous highs. You broke a key resistance, but there's an unfilled gap. Unfilled gap here, and my God, that's some good volume though. That is buying. That's the highest volume Coors has had since, wow, May of 2018. So like 5-year highs on volume on the gap up, but it's not like the price isn't like, the parity isn't that crazy, so it may not be a breakaway gap, but the volume signature is there for a breakaway gap. But I just don't see how it could happen now after what they've done. I'm sure that, I think there's going to be a massive boycott on this one. But dude, technically it's way better. Like technically, you didn't look at what the ticker was. If you get a bullish back test of 57.71, 59.50, you got a real nice breakout and back test where there could be a lot more upside above that. Now that's the cutoff. That is certainly the cutoff for anyone that would own this. I don't know why you would. It's kind of crazy. There's just so many assets. Why own this? But yeah, sure. I think it probably gapped up on the earnings, and also because their main competitor destroyed themselves. But, we'll see how this goes. All right, unfilled gap down there around $60. And there's a key inflection point that was always resistance. Maybe it becomes support. We'll see. There needs to be a test though. All right, that's the competitor. Now's last request. I've been live an hour and 15 minutes, and what else can I do, man? I don't know. Getting real strange these days. Late stage streamer world, man, it's getting real weird. The feeling of it all.
Appreciate the Discord updates. Helpful whilst mining fiat and Mickey D's.
So G-Dog, thanks dude. 420. Appreciate it, man. Thanks for being a participant in this community. Thank you, man. It's just traditional technical analysis. It's just the charts, psychology, buyers and sellers. That's all it is. That's the culture. That's can't mean that. How does one grow that? How does one grow? How do you get more people interested in it? I guess they just don't. It's like such a niche thing that no one's going to be really getting into like this type of world. And maybe it's just me. I don't know. It might just be me. And I'm not ruling that out at all. Okay. I'm not delusional. So I might be the problem. And I don't know that. So it might just be the way I present things or whatever. But man, trying new stuff, shorts, it's actually hurt the channel. Like legit, statistically it has. Doing these new shorts. So like on YouTube and stuff. So thanks for coming out. I'm trying, man. I'm doing my best. Swear to God, I'm doing all I can. So the way this keeps going though, when will there be a bottom? When will there be a bottom? I don't know. It's like capitulating. So I guess I can only go to 0 on viewers and likes and subs. So I appreciate y'all coming out and watching the stream. So I'll just be back. Till next time, respect the TA.